Thanks for having me again for the ASA. It's great to be back. Look, Vulcan Energy, we're doing really well. We're kicking a lot of goals in a market which is quite volatile. It's great to get a chance to update different shareholders, new and hopefully existing. So hopefully we can go through a bit about where we are today, a bit about our strategy and some of the growth options that we have. Next. For those who aren't aware, Vulcan is the next big lithium producer. We'll go into that and exactly what that means and how we're achieving that. But I think it's an important element that moving forward, Vulcan is uniquely positioned to start producing battery-grade lithium chemicals towards the back end of this decade. So that is Vulcan Energy, and I'll explain a bit more about that to the new shareholders. Next. So again, just to step back a little bit, zoom out and who Vulcan Energy is. We are an Australian-born and Australian-grown company on the ASX. 8 years ago, we were founded on the ASX. We are effectively an integrated energy and lithium chemicals company. And the uniqueness of the company is that we can produce both energy and lithium from the same source. It's a geothermal brine that is situated in the beautiful part of southwest Germany in the Upper Rhine Valley. So we're in the central part of Europe, which is important because it's an extremely industrialized area of the world, particularly in terms of batteries and automotive. What's unique about Vulcan? We were fortunate a number of years ago, our founders were busy geologists who basically were able to constrain ourselves into this part of Germany where we've got the Upper Rhine Valley. The Upper Rhine Valley maintains a wonderful sandstone which hosts this brine resource. We have 17 licenses up and down the Upper Rhine Valley, and what that gives us is a huge endowment, a huge lithium resource of around 29.1 million tonnes of lithium carbonate. Now, that's not just Europe's largest lithium resource, it's globally significant. What's also important about that is that it's actually a naturally heated brine with very low impurities, and both of those have a huge impact in our cost of production and heavily embed us as a low quartile, bottom quartile producer, which we'll talk about. Lionheart is a project that most are aware of. It's our flagship project. It's also the project that's going to redefine how the world looks at lithium production. This project can produce 24,000 tonnes of lithium chemical, and at the same time produces a huge amount of renewable energy, 275 gigawatt hours of renewable power and 560 gigawatt hours of heat. And we do this over a 30-year lifespan. So last December, we announced successfully a 2.2 billion euro, nearly a 4 billion Australian dollar financing package to basically build this incredible Lionheart project with full offtakes committed for the first 10 years. That enabled the Vulcan board to take a final investment decision in December, and we've been really busy starting to build the project, which I'll show you in a minute. I don't want to lose the fact that Vulcan has a big growth story as well. The fact that we've got this huge resource means that we will see a staged development of future phases over the next few decades. Next, I'll go on to a bit more about what Lionheart is. Thank you. Next as well, yeah. Just on the management team, I won't dwell, but I can tell you this is a very unique management team, probably one of the most experienced management teams, not just here in the ASX, but definitely in Europe. The team here, particularly in Germany, have built these type of projects for decades, from the geothermal side, from the lithium side, even from the subsurface side. So it's a unique position, a huge track record in delivering and operating these type of projects, including the Australian contingent. Next. So a bit about Lionheart. For those who aren't too familiar, we like starting with some simple cartoons because effectively this looks probably more analogous to an oil and gas project than it does a mining project. We have a number of effectively wells that produce brine. We have sufficient wells that we can produce enough brine, which then goes to a central lithium extraction and energy extraction facility. We call that our GLEP, or our centralized facility, where we take the energy, we take the lithium, we extract it, and then we sell that to communities in terms of energy, or we actually send our intermediate lithium extracted product, lithium chloride, to a downstream conversion plant in Frankfurt. So it's a very compact It's a very short supply chain, all within Europe. So you're not taking a lot of geopolitical or macro risk where you're producing either spodumene in Australia or Africa, taking it to China, tens of thousands of kilometres, and then sending that into Europe. So very compact, very resilient, and very insulated, which we'll talk more about next. And I'm a process engineer by background. I'm a chemical engineer, have been all my life, and a very proud one. And I like showing how simplified our flow sheet is compared to a lot of other complex sort of like lithium processes. Ours is actually quite simple in context. Again, the upstream is very well known. Germany's been producing geothermal energy for nearly 60, 70 years. So the first few steps of the process are well known. We pump hot brine to the surface. We then send that to a geothermal power plant. We extract around 100 degrees of energy, and that leaves us with a lithium-rich, cooled brine. And that's actually a waste product in previous days. But now we take a lithium extraction process, we bolt that onto the back end of that, we extract the lithium, and then we re-inject the wasted brine back into the reservoir. So it's a fully circular process. So we don't have tailings, we don't tailing dams. In fact, we have nothing. It's fully circular with no waste, which is quite unique. Again, helps heavily on the social license to operate. Also helps heavily on the cost side because you're not dealing with a waste product. Once we've extracted that lithium, down the road, 100 kilometres literally down the road, we convert that into a battery grade product. And all our offtake partners are literally kilometres away. So it's an incredibly secure supply chain. And within Europe, that's becoming more and more important, particularly with a lot of the geopolitical elements. The fact that our partners can actually drive an hour down the road and pick up their lithium and take it to their cathode and cell plant. So that's our integrated brine to battery value chain. And that's exactly what we're going to emulate up and down the Upper Rhine Valley in future phases. Next. So just Lionheart in numbers, I won't focus on all, but it's a hugely profitable project. This has been validated over a number of years. We've just raised 2.2 billion euros. That's not easy in Europe. It's quite unique. To do so, you need a lot of robustness in the numbers. And the ones I want to focus on here, we're going to talk about them in the next few slides. One is the cost of production. We sit heavily embedded in the bottom quartile with one of the lowest cost producers in the world. That helps across any price environment. So when you are seeing manipulated prices globally, we're insulated. We're also insulated because of the pricing mechanisms, which I'll talk about in a second. But that effectively, between cost and price, we create a huge protected margin that sees us right at any price environment, and then we can capitalize on high price environments. Numbers like nearly 2 billion pre-tax NPV, and we see revenues year in, year out of nearly 600 million euros, of course, help us with a huge EBITDA margin. So I think they're the key numbers we want to talk about. If we delve a bit deeper on the next slide, this will give you a bit more context on why we're so confident and why we've been able to raise so much capital is that we can pay that back because we've got high confidence in our cost of production, which is what you can see on this chart here. So this is a global cost of production. It's a C1 chart, meaning it's just effectively the operating cost, and we're measured against all our peers. And where you see Vulcan is we sit in the bottom quartile against a lot of legacy projects. Interestingly, the first two quartiles are pretty much governed by brine projects. That's effectively what produces a low-cost brine, is that you can start from a brine resource. And as you move towards the right, you get into the hard rock players. So if you're looking at long-term investment, long-term returns, and a long-term lithium project, you're sort of looking at brine. And then the fact that we've got a preheated brine with low impurities affords us the ability to simplify our process even more. And that's why we end up having this really, really strong cost of production curve and why we can always ride out any price environment. Next. Now, to go with that, probably the most unique part of Vulcan's story is the quality of our offtakes. A lot of lithium companies can say they've got, LOIs or MOUs. We don't. We've got binding take or pay contracts for the first 10 years. Vulcan has sold out of 100% of our volumes for the first 10 years. We don't know another lithium company that's done that. And what's even more importantly is the diversification of those offtake partners. We have a trading partner in Glencore, well known. We have the largest cathode maker in Europe, in Umicore, and actually the largest cell maker in Europe, LG Solutions, coupled with Stellantis, one of the largest automakers. Now, that's not just the unique part. The unique part is that Vulcan has 72% of all those volumes in the first 10 years protected under price floor or fixed price. So again, it doesn't really matter what's happening globally and the lithium price. We are heavily insulated more than any other company. And the fact that we've got huge price floors and they're very, very attractive, and we needed that to be able to raise all that debt and all that equity. 72%, nearly 3/4 of that are protected in the first 10 years. So we've got an afforded luxury of that, but that's because of the resilience and the robustness and the fact that we sit in the middle of Europe and localizing those supply chains. So that's Lionheart in a quick snapshot. Next. Again, we've not been resting in our laurels. We haven't been celebrating since FID. We've actually put a lot of this capital straight to work. We're absolutely delivering. We're on track, both on time and on budget. First 6 months have flown by with real success. Here you can see this is the heart of the lithium extraction and our geothermal power plant. And we've actually started foundations work on this only in the last few weeks. So going very, very well. Next. And we have the same success across all elements. So this is a true integrated upstream and downstream project. So we're building pipelines, we're building well sites, we're drilling wells, and then we're still building our 2 lithium plants. So all going very, very well. And it was commented in our quarterly yesterday. Next. And I guess one thing I wanted to give, and we will start providing more guidance to shareholders and to investors, is that Vulcan has set a pretty ambitious timeline to get to first production at the end of 2028. We had some really stretched targets for 2026. We've already delivered 3 out of the 4 with high confidence that we'll deliver the last milestone this year. We're also on track for the remainder of the program, and we'll obviously keep our investors and our shareholders updated today on the progress and continue to provide CapEx guidance in the future as well. Next. I won't spend too much time on the lithium market. Each has got their own view here. We're very European-centric, and when we talk about Europe, is because Europe is probably the next big electrified jurisdiction in the world after China. Huge numbers coming out of Europe. 1 in every 3 cars now in Germany is electric. That's an 85 million person country, same as France. And they're now getting to 30%, 1 in 3 cars with huge growth rates. So the path, the direction is very, very clear in Europe. They will electrify everything they can, whether that's passenger fleet, trucks, other forms of mobility. And of course, then you're going to the battery storage with AI and data centers. So huge signals coming out of Europe. And obviously we are the flagship project supporting that battery industry. So next. I won't spend too much time on the remainder. It's just a quick message for the shareholders. China is moving into Europe. That's not the case in the US. It's not the case in North America, but in Europe are opening doors to China. And that's a significant message when it comes to investment and continuing to grow a battery value chain in Europe, which again, Vulcan will be the core of and the center of. But we'll talk more about that in future sessions. Next. And next again, just one little comment to the broader group. I mean, Vulcan is a lithium company. We're not driven by hydroxide or carbonate. We are a true lithium company, and we're agnostic to what the market needs and what we will produce. The most important part for Vulcan is that we can produce upstream. We can improve the DLE. We can use our direct lithium extraction technology to remain low cost and very sustainable. We can convert that product from the DLE, from direct lithium extraction, into any chemical. And that's the key. The key is that you can then create a hugely important, hugely low-cost upstream chemical in lithium chloride, and then convert that into hydroxide, carbonate, or lithium chloride. So Vulcan is really, really set up for any future-proofing and success in the lithium market moving forward. Next. Last but not least, just to leave you on a few thoughts on growth. As we mentioned, we've got a huge endowment. Vulcan has nearly 30 million tonnes of lithium carbonate equivalent in resource, according to the JORC code, and that's been qualified and validated by third-party competent persons. We're only using a number of those licenses for phase 1 Lionheart. So it is our job to then grow the company, build one, design one, build many. And we are releasing a PFS in the coming months, which will indicate what we're doing next. If you go to the next slide, effectively, this is what we'll be producing in September. We will show product flexibility. We will show, importantly, that we can build phase 2 for cheaper than we can build phase 1. So we're looking at capital efficiency. And that's important because we can take the lessons from phase 1 and continue to improve shareholder return, investor returns, by thinking about how we implement those improvements and those lessons to phase 2. So we will come out with a preliminary feasibility study in September. We're very excited. We think it's looking very, very attractive. And I think, again, that's going to surprise the market a little bit. So be aware of that coming out in the coming months. Next. And just to finish up, again, Vulcan is in a hugely transformational time. The last 8 years have been important to get to where we are, to fully finance our phase 1 Lionheart project. It is a flagship project of Europe. It has incredible support from all European banks, European governments, and that's now fully funded to get to production at the end of 2028. Whatever Vulcan does, we will always remain at the bottom of the cost curve. That's because of the resource that we have and applying this integrated energy and lithium process onto that resource. So we will always remain insulated against these price environments, but we will produce at low cost lithium. It's a huge resource. I mentioned that it's globally significant. We will spend time developing that in a smart, clever, and an efficient way over the next few decades. And again, it's remiss of me not to talk about the support that we have. We have outstanding support from the German government. They've invested $500 million Australian dollars in the Lionheart project. Imagine an Australian government spending $500 million on one Australian project. That's what's happened to Lionheart and Vulcan in Europe. And also we've had huge debt support as well from a number of government banks. We will remain a sustainable leader. The fact that we almost have a carbon neutral process will always be attractive, particularly in Europe, when they take sustainability probably even more seriously because of what's happening and the way they're seeing the impact of climate in Europe. And last but not least, Vulcan has quite unique offtake capability. We're heavily protected by price floors and fixed prices. That's unique in the fact that that gives us incredible break-even prices that no matter what's happening globally, Vulcan will always be protected from our offtake contracts. So thank you for listening. That's Vulcan and looking forward to the Q&A.
Thank you, Cris. That was an incredibly insightful presentation. We have quite a few questions here. So I was wondering, do you have 5 or 10 minutes for us to go through this? Is that...
Of course. Yeah, happy to help out with the shareholders, yeah.
Fantastic. So I'll start at the beginning. It looks like we do have some Vulcan shareholders, but also some people who aren't Vulcan shareholders. So thank you for providing that introduction to Vulcan at the beginning, and I'll ease into the more technical questions as we go through this. You mentioned the global supply chain, and I just want to note for anyone on the line as well that Vulcan is a dual listed stock, so it also is listed on the ASX as well as the Frankfurt Stock Exchange, and it was one of the first Australian stocks to have this dual listing. How do you manage those obligations and disclosure and communication to those two markets on behalf of potential investors and shareholders?
Yeah, it's a good question. Look, it does, honestly provide more complexity during reporting. But ultimately what it does, it opens up a broader, shareholder base for us. The Australian shareholders tend to be much more aware of, mineral mining, resource risk as we go through this period. And then you've got a European-based shareholders who are typically more yield-oriented. So they don't like, that risk period during the development. They like seeing earnings, and then they tend to go for yield. So it's a nice compromise, right? We've got a huge, Australia or Asia Pac set of shareholders that understand that growth can be managed through, good project management, good development, and we need that capital. And then we obviously need to use the European side to probably grow Vulcan. There is a lot of synergies, so we can still manage that. It does create a tilter across the financial periods, but we've been doing this for 8 years now, so we've become pretty good at being able to report across both stock exchanges. So it's becoming a lot smoother than it would have been a few years ago.
Thank you for that, Cris. Now, moving into some more of the technical questions. We have a comment here. So thank you for a very interesting presentation. Can you please tell us how you assess sodium-ion battery technology as a threat to Vulcan's business model?
I love sodium-ion. I may be the only CEO in lithium that says that. Having spent a lot of time in batteries myself, sodium-ion is complementary, absolutely. People have to start thinking differently about the battery industry. The analog I always provide is, the combustion engine. When you buy a car for the last 60 years, or even a lawnmower, you've got a 2-stroke engine, you've got a 4-stroke, you've got a 4-cylinder, 6-cylinder, V6, V8, and so forth and so forth. You've got diesel, turbo diesel, oil. That's what we need to do in the battery industry. If the battery industry is going to replace the combustion engine, we will need horses for courses. And so sodium ion is an example of a low density, very safe, can work in cold temperatures, but it has a huge weakness. It doesn't have energy density. And interestingly, when you look at what's happening globally, you need both. We've got a really strong lithium ion battery, which can sit in the middle of like range and charge and density. But as you go towards lower costs, or you start looking at mass market cars, or more predominantly for energy storage, sodium ion plays a really important role there. But what it doesn't do, and it never will, and that's just chemistry, and I know as a chemist and a chemical engineer, it will never be energy dense. So when you start moving towards, higher charge, longer distances, faster charging, trucks, aviation, that's obviously, restrictive. So think about it as more complementary. And to be honest, when you think about the future of batteries, it's actually more solid state. Solid state needs lithium. That's the one thing that you need for solid state. And it's actually 5 times more lithium than the current lithium battery. So actually, we're very, very buoyant on both. And again, it's very complementary to use sodium ion. So no concerns from our business case, that's for sure.
Fantastic. Thanks for that, Cris. There were a few questions here around the sodium ion battery. So I will go to questions around the share price. So there's a few questions around the share price, and also people have made a comment around analyst forecasts. Could you comment on the difference between a lot of analysts, so this is a question posed from the audience, a lot of analysts have suggested that it is a buy or a strong buy, or there are positive recommendations from analysts, not suggesting that we're advocating for that from ASA. Just want to note we don't give financial advice, but could you comment in terms of just the expectations around the share price, but also there's a question which I'll combine into this. When would you expect to start paying dividends, and how are you managing that capital allocation process along with the execution of the projects?
Sure. I mean, the share price is, it's a challenge. The last few years we've had huge support and a very, very strong share price leading up until FID last year. And we are very open. We took a large capital raise last December, which was important to basically get Vulcan to be where it is, fully funded phase 1 project where we're off. We now have the ability to build this incredible project. But what you can see is, there was a big part of the market come January, February, March this year that, went from, developers and put their money in a lot of the producers, which makes a lot of sense when you see the lithium price rallying. And we probably weren't caught up in that particular uptake. But importantly now, parity is very much with Vulcan, our share price, and we're doing better than a lot of the lithium producers and developers in the last quarter. And we've seen that with a lot of the price decks. So I think we're now holding very clear with price sentiment and probably with supply sentiment. Where I generally believe is, we're good value is, we've decoupled a number of times from that lithium pricing from our peers. And again, I think what we see is when you're starting to execute a project like Lionheart, people want to start to see delivery. And that's what's ahead of us. And we're going to continue showing that in a number of the quarters, that we're going to build this project, and when up and running, we'll be providing a lot more cash than most lithium companies. So that's the thing I would uniquely hold, is that, once built, Vulcan will have a cash engine not many lithium companies can match. Now, to be honest, one thing we believe will be difference between analysts is that some analysts carry different price forecasts, and you can see that when they go through the valuation of lithium companies. So that's an important element. But in Vulcan space, a number of the analysts also consider phase 2 and phase 3. So depending if they're building up a waterfall of future phases or single phase, you'll see a difference in target price. And they typically announce that, and we're very aware of that. So that's why we're very excited about releasing our phase 2 PFS. We think that will normalise the target price element across a lot of the analysts. And what I can also tell you is that we're working very hard to get a number of other global banks to start covering the stock as well, which will only help as well. On your last question, Nelly, I think for us, we we've generally got a plan. We're very, very aware that delivering Lionheart is the best thing we can do for our shareholders right now. That's why we're going to be providing a lot of guidance moving forward. We've got a huge tailwind in the fact that we are Europeans, pedestal lithium company. There's a lot of pressure on us, but that's pressure we want because we know we've prepared and planned and now executing this project as per plan, and that's what will drive our shareholder value. So, we're looking forward to the challenge and obviously updating shareholders as we go.
Thank you, Cris. I will close the session out now, but I'll just make a comment. We do have a number of questions here that are still outstanding. So there's been a particular interest in the projects going forward and comments around dividends and share price, but I'll engage with those people that have posed those questions and also engage with you going forward. Cris, I take it there's a lot of travel involved, and I take it you're doing this call from Australia. So thank you so much for taking the time to update both the shareholders of Vulcan, but also potential shareholders and our members and subscribers of the ASA, and look forward to engaging with you again. But also big thank you for jumping on board while we waited for the next presenter as well.
My pleasure. Thanks, Natalie, and looking forward to updating the ASA in the future as well. So thanks again.